There we go. First bill on the agenda today is Senate File 286, Senator Housley, and it is Social Security Tax Reform Day. So you're first on the docket, Senator Housley. Welcome to the committee.
Thank you, Mr. Chair and members. Turns out Senator Dietzig, I was going the wrong way. I ran into Senator Dietzig in the basement. I went, "You're going the wrong way." No. Yes. Yeah, we're not in the Senate office building. Senate File 286 is, put simply, starting January 1st, 2017, an amount equal to 10% of the Social Security benefit is a subtraction, and that percentage increases by 10% each year until 100% of the taxable benefits have been subtracted. Simple.
So, Senator Housley, so just to confirm, yours is a simple 10-year phase-out, and that begins in
January 1st, Mr. Chair.
Okay, good. So just a simple 10-year phase-out. All right, and the estimated cost of your...
Mr. Chair.
Here, no, it's not. It's right here. There we are. We have it. Okay. Well, Senator Housley, any questions for Senator Housley with their 10% and then 10-year phase-out Social Security? Well, Senator Housley, anybody, do you have any testifiers?
Mr. Chair, no, I don't.
Mr. Chair.
Okay. Yes, Senator Gazelka.
Thank you. First of all, Senator Housley, thank you for being one of many that are identifying that Social Security is something that we should consider exempting or moving towards exemption. And I look at all the bills here, and they're all slightly different, but I think yours is one of the ways that we could get there. There's other possible ways, but I think a number of folks get that we're one of a shrinking number of states that continues to tax this. And as I look at people making decisions to move out of our state when they retire, this is one of those factors. And so, and this would be the same message for all, but for all the people that are on bills, I think we're kind of all having that sense that we better pay attention to it. So, thank you for bringing it forward.
Thank you, Senator Gazelka.
Yes, thank you, Senator Housley. It's an important issue, and I think it's very important to the future of the state. You serve on the Aging and Long-Term Care Committee. You are chair of that committee, and we're all aware of the significant challenges we're going to face in the future if we, both people moving out of the state and with the population growing older. So thank you for your work on that committee, and thank you for bringing this forward. So with that, Senate File 286 will be laid over for possible inclusion. Thank you, Senator Housley.
Thank you, Mr. Chair.
On to your chairing your committee.
Senator Senjum.
Sorry, Senator Senjum. As the authors show up, second false alarm. Okay, we're at next on the agenda is Senate File 424 and 425 with Senator Limmer. Good morning, Senator Limmer. Welcome to the committee.
Good morning. I'm sorry I'm a little late.
It's all right. We had a quorum early, and we had a quick first bill.
The roads out in Maple Grove are very socked in with a lot of fog right now. So,
okay.
As I came further and further to the Capitol, the sun just got brighter and brighter. Senate File 424. Let me make sure I'm on the right bill.
And you had no amendments, correct, Senator Limmer?
That's correct. I believe this is the bill that would be the one.
Yeah, your 424 is the 100% phase out immediately.
That's right. That's right. Well, Senate File 424 addresses the desire of some in our state to repeal the income tax that is attributed to a Social Security check income. As I have watched the legislative process over many years, I think it was about 10 years ago that Senator Terwilliger brought a bill to this very same committee requesting a repeal of Social Security benefits. Minnesota is one of the few states left that continue to impose a tax on this type of income. I believe the federal government still taxes that income, but many states, most of the states, 3/4 at least, if not more, are not taxing that income, and I think it's time that Minnesota should seriously consider that particular proposal. It started about 10 years ago when Senator Terwilliger brought it forward. I, at the same time, had put a bill into that very same effect, but it didn't seem to catch fire too much in this committee, and so we're bringing it forward again. And I noticed on your agenda there's quite a few senators that have a similar idea, maybe not in a full out-and-out repeal in one fell swoop. And I know that it's the full repeal does have some significant consequences to budget setting, provided that we don't have any desire to make adjustments on the spending side of the ledger page. So the bill in its entirety is rather simple. It simply repeals the income tax on Social Security effective December 31st of 2016.
Okay. Members, any questions for Senator Limmer on this proposal? Seeing none, Senator Limmer, you're correct. As we mentioned to Senator Housley, it is important with the demographics that we're going to face in the situation in the future with the retiring population and the necessity to keep them here and also keep them, allow them to live more comfortably. It's a good idea. And as you mentioned, yours, the first one you have here does have significant impacts, but we may be able to work with that. So with no further questions on Senate File 424, we will lay Senate File 424 over for possible inclusion. Senator Limmer, you're up. 425.
Thank
Senate
you.
File 425.
Thank you, Mr. Chairman. Senate File 425 is similar to 424, although it spreads that phase-in. It creates a phase-in of over 4 years to place the full repeal into action. This would ease that burden on our budgetary process, and it would give perhaps the committee some ideas that you don't have to do it all in one fell swoop. I believe that it's important to get this done. Our population is growing, as you know, in the retirement age, and it's even more significant when you look at the federal government and how they have failed to raise the Social Security income. They aren't even keeping up with inflationary rates. So that little cost of living adjustment that has been the norm over many years has kind of dissipated away. Sometimes in recent years, it's been less than 1% of an increase. And when people are on a fixed income, I believe that we're now at a point that the state finally has to come to terms with its older population and how we're going to provide, through tax policy, a little relief to them. The 4-year phase-in is simply that. After 4 years, the repeal would be fully engaged. And perhaps the 4-year is not the magic number, but it's an idea to start us to have a conversation about how we deal with this. That's the bill in its entirety, Mr. Chairman. I'll stand for any questions.
Thank you, Senator Limmer. Members, any questions on Senate File 425? This is an amazingly popular bill. This is great. So, Senator Limmer, with that, no further questions. Senate File 425 will be laid over for possible inclusion. Thank you, Senator Limmer. Enjoy Public Safety Judiciary Committee.
I can hardly wait, Mr. Chair.
Next up is Senate File 401. Now you're up, Senator Senjum. Senator Senjum, welcome to the other side of the committee. You can go ahead with your explanation of your bill. The first one with 401, and you have 403. So what is different with your bill, Senator Senjum?
Thank you, Mr. Chair. It's good to be here this morning. And, Mr. Chair, I would say all these bills are good. This is a journey I believe that we need to start. And were we to start it, we're not unlike what a lot of other states in this country have frankly already done. We're one of, one of the 13 states that do anything with respect to taxing Social Security. Of those 13, there's really just 4, Minnesota, that doesn't provide any exemption at all against the Social Security tax. And so we've, I think, to some great degree, become an island. And I don't think any of us have to go too far back home, coffee shops, et cetera, to hear. And I would suspect we all have heard from our seniors about this issue. So it's one that does bubble up all over the state of Minnesota, and one I think it's time to, as I said earlier, start this journey. I'm not going to go through all my preliminary comments, as good as they look on this paper, but I think that should we be taxing really a federal benefit? This was enacted as a federal benefit. We're taxing a federal benefit, and I just that word benefit's big. And the other thing to say, I think, just generally is we're taxing something that, frankly, already to some degree we can call it withholding, but it is a withholding tax as you get it on your pay stub, and then secondarily as you begin to be a recipient of Social Security, is taxed again. Do people leave Minnesota because of Social Security taxation? I think they do. And these aren't just the rich and famous, at least where I live. These are people that, frankly, tell me about their plans to leave at the Eagles Club in Rochester, Minnesota. They're just husbands and wives that have worked all their life, and now they're retiring. They have they're not poor by any means, but they're certainly not rich. But they understand taxation and policy and rewards. And Florida and Texas start looking pretty good. And we can even talk to our certified public accountants about that. They tell us this all the time. And then I would say, just in conjunction with that, should we just up the exemption in terms of not exempting certain little bit higher incomes? Well, I think we do that. It's an idea, but those same people are going to leave Minnesota. People are very valuable to our communities, and I don't think that that's necessarily good either. And I think that we ought to be able to, frankly, start getting out of this, if you will, one of 4 states in the country that exclusively and without exemptions taxes Social Security. So, Mr. Chair and members, Senate File 401 is a listing, if you will. It's an 8-year avoidance of the avoidance plan of the tax of Social Security. It's basically the Iowa plan. I thought getting into this several years ago that, for goodness sakes, we can at least do as well as Iowa on this, and I think we can. And if you didn't know, in 2014, Iowa, the state of Iowa, was their last year of taxing Social Security. So even people that live in southern Minnesota can move across that border and avoid this tax if they want to, and still, frankly, stay within reasonable distance of their family, if that's important to them. And then, it cost $282 million. The first year, first biennium, 507. The second biennium, it involves about 393,000 tax returns, and an average a decrease of taxes on this plan about $343 per individual. And I think that's it for that one, Mr. Chair.
Thank you, Senator Senjum. It is good comments and a nice different take on how we get there, and shows that there's a lot of different ways to get this done. So, members, do you have any questions for Senator Senjum on Senate File 401 on this particular approach? With that, Senator Senjum, seeing no further questions on this one, Senate File 401 will be laid over for possible inclusion. Thank you. And now on to Senate File 403. And members, if you haven't found it in your packet, it's a nice summary sheet put together by Council of how these plans differ different pieces of it. Very handy. Thank you. So Senator Sinjum, 403.
Thank you, Mr. Chair, and the members again. Senate File 403 is obviously along the same lines. How do we scale off this? And it involves a 10% a year for 10 years. That equals 100%, by the way, and it gets us there. But Mr. Chair, let me just offer this. This particular bill, and perhaps Senator Housley as well, and frankly all of them, I think at least my message, and I would believe to some degree theirs, I won't speak for them, is let's just start. I mean, I don't care if you make this 20 years or 15 years. It doesn't mean it's all scalable. But let's just start. Let's send a message to our people across Minnesota that we're serious about moving off this particular tax. So it is a 10-year scale off or buy down or exemption plan, if you will, for Social Security taxation. And again, the first biennium, $135 million. It's less expensive than the other one. Second biennium, $365, and involves 391,000 tax returners, or at least Social Security recipients, and about $110 of tax reduction would be involved with those individuals. So at 10 years, it becomes a little less expensive, but move it up to 12 or 15 if you want to, Mr. Chair.
Thank you, Senator Sinjum. Members, any questions for Senator Sinjum on 403? It is the same as Senator Housley's first bill, 286. Seeing none, Senator Sinjum, Senate File 403 will be laid over as possible inclusion. Thank you. For the testifiers that are with us, we have one more bill, Senator Rest, and then we'll take the testifiers, since all these bills obviously are similar. They don't have their individual testifiers. So with that, Senator Rest, you're up, 1175. We're going very well today, doing very well today, Senator Rest, so I would expect nothing less. Welcome to the other side of the committee, Senator Rest.
Thank you,
Madam
you have
Chair. An amendment too,
Mr. Chairman, I bring you Senate File 1175, and I move the A1 amendment. It's an author's amendment.
Senator Rest moves A1 amendment. It is an author's amendment. You have any comment on that, Senator Rest?
I will, as I explain the bill. It does just get the bill in the shape that I think makes more sense for us to consider it in.
We'll do that. Members, any comments, questions regarding author's amendment A1? Seeing none, all in favor? Aye. Aye. All opposed? Nay. A1's adopted. Okay, Senator Rest, your bill.
Thank you, Mr. Chairman. Mine, too, is a bill that addresses bringing tax reductions to some, but not all, Social Security beneficiaries, because many Social Security beneficiaries don't pay any taxes on any part of the of their benefits that they receive. I think it helps us to put the taxation of Social Security benefits in kind of a historical context to begin with, and to know that in 1983, when Ronald Reagan was president, was the first time that Social Security benefits started to be taxed, and they were taxed up to 50% of the benefit if a taxpayer's income exceeded a certain amount, depending on what their filing status was. And it was effective for tax years 1984 and thereafter. In 1985, since Minnesota was was then and continues to be a conforming state, we conformed, and we based the calculation on the federal adjusted gross income. As you know, later on, we went to a different kind of system with conformity and went to considering federal taxable income and Minnesota taxable income, and we did that in 1987 when we did a huge reform, and we got rid of the so-called overall pension exclusion, and we went from FAGI to federal taxable income as a starting point for determining Minnesota liability. In 1993, we went to what we generally think of as the current system. That is this two-tiered, you never pay taxes on 15%, but depending on your otherwise income from whatever sources that would be otherwise taxable, you can pay taxes on up to 85% of your Social Security benefits. Some have asked over the years if the 1585 was arbitrary, and to some extent it is. However, because it is just a number, but the Social Security Administration has estimated over the years that the 15% that is not taxed represents actually it's a substitute, a surrogate, if you will, for the amount of taxes that were paid into the Social Security system by any given beneficiary, and that only that 85% of the Social Security benefits, whether they're taxed or not taxed, depending on your otherwise total income, represents income that was never taxed. And so that is the situation that we face when we consider how we are going to continue to treat Social Security income in Minnesota. What my bill does is to recognize all the complications that people do face who are Social Security recipients, and I think, actually, I'm not sure about Senator Senjum, but I doubt that there are more than 3 of us or 4 of us at the most in the Minnesota Senate who are Social Security recipients, and I certainly am one of them and receive a very, what I consider very generous Social Security benefit as a widow's portion. What our bill does, what my bill does, however, is indeed to recognize that burden, but to not bring such a huge toll on the general fund of Minnesota that it would make priority setting for tax relief really, really lopsided, where it would be eventually, at least, even in some bills as early as 2019 or 2020 and 2021, end up costing the state $500 million, and by 2027, 10 years from now, and some of the bills could put a hole of about $1 billion into our against our general fund. Right now, as I understand it, by exempting that 15%, we are already at about $500 million a year as what we understand to be a tax expenditure. So what do? We looked at a way, and that's what the amendment does, a way of starting to give tax relief to Social Security beneficiaries, and the numbers have been bandied about, but as far as I understand it now, there are 14 states that tax Social Security. 6 follow the treatment completely, and Minnesota is one of those, and 8 tax some benefits, including Senator Senjum. Iowa does tax some benefits. They are not completely exempt. 27 states and the District of Columbia are entities, tax entities that exempt all Social Security benefits from taxation, so we are indeed somewhat of an outlier. But 9 states don't have any income tax, so by default, Social Security taxes there are not taxable. What the bill proposes to do is to add a subtraction to Minnesota taxable income in varying amounts, and we're now handing out an example for you to look at. For married filing joint, that a new subtraction after you've determined Minnesota taxable income of $1,600 for married filing joint, $1,250 for single people, and for married filing separate returns, just having the married filing joint and making that $800. To make sure that just like in the regular income system, tax system, that there's not bracket creep. There is an inflation factor that would be applied to this additional subtraction every year. If you look at a comparison, the same number of taxpayers in all of these bills would generally be affected, just somewhere south of 400,000 taxpayers, between $390 and $400,000, so 400,000 people. So we're talking about the same group of taxpayers. They're not different from bill to bill that we have in front of us. The bill that I have, and it is carried by Representative Carlson and supported by Representative Davids in the House, would cost $74 million in the current biennium, 18-19, but it only goes up to 82.2 in the next biennium. So it is really a much more gradual tax relief from charge to the general fund. The average tax decrease from this subtraction, and the way that the Department of Revenue has explained it to me, and I'm not sure I can repeat that explanation clearly, is that that $1,600 that would be subtracted actually has an impact on the taxpayer of about $2,500. I'm not sure how those numbers work like that, but it is more than just what the $1,600 is. So 393,000 returns would be impacted in 2017. It would start this year with an average decrease of $92. Some of the other bills, one that, and I think the best contrast is, what if we got rid of it all at once? Would indeed cost almost $1 billion even in the current biennium, and the average tax decrease would be $1,034. Some of the others, including Senate File 403, Senator Sinjum, the impact is a little bit more similar. The average tax decrease of in 2017 would be $110, not so far from $92, but the cost of Senator Sinjum's bill in 2018 and 2019 would be $135 million, almost double what my bill is, without, I would argue, an appreciable difference to the beneficiary of this tax decrease in this tax year. I don't think either one, a tax decrease of $110 or of $92, would be enough to keep someone in Minnesota who was determined to leave one way or the other, or to stay. But as Senator Senjum so importantly pointed out, it is a one thing that's important sometimes is that we begin something. And I think that our bill begins and continues because the amount deducted would be adjusted by the CPI, and is a gesture we certainly can make to Minnesota residents who are the recipients of Social Security benefits. I believe Mr. Willems has prepared a handout that compares the bills. And Mr. Steinhoff, has it been distributed now? Thank you very much. As some of these interactions are difficult to untangle, at least for me, I'm going to ask him, if you would, Mr. Willems, if you would take us through those examples and what they mean. Is that okay, Mr. Chairman?
Yeah, Senator Rest, that's, why don't we do that first, and I have a quick question regarding the example of your issue. So Mr. Wilhelms, could you run us through the spreadsheet?
Sure, I'll keep it very brief and hopefully as clear as possible because the calculations can get pretty complicated.
Mr. Chairman, Mr. Willems, could you put the mic closer to your mouth? Thank you.
Mr. Chair and committee members, the way that Social Security income is taxed is they start with a modified income calculation of your adjusted gross income plus non-taxable interest plus half of your Social Security benefits, which creates your provisional income, and that's line 3. And so this provisional income calculation is how they determine the threshold or the amount of benefits that are included of your Social Security subject to tax. So if you're a married filing jointly couple, which is what this example is, with average benefits of $25,000, so that's consistent among all filers. The only difference among each of these filers is that their other taxable retirement and wage income increases from filer A to filer E. And then, so basically on the way the brackets are then broken down on your provisional income in the first tier, which would be about $6,000, 50% of that amount is included, and then 85% of the additional tier, which is anything over $44,000, is subject to tax. And then so you'll see that the provisional total income subject to tax is different than the Social Security subject to tax. So the table below that analyzes the proposals takes the total Social Security subject to tax times the marginal rate to get the filer benefit. So that's the basic calculation. The only caveat that I would mention with this example is that there's a small fraction of filers that fall into filer E, and filer D is a little bit larger. The lion's share will really be filer B and filer C among the population of filers. And again, another caveat is this looks at the first fiscal year benefit, fiscal year 2018, and does not carry through. But if you look at Senator Limmer's proposal, Senate File 424, that kind of gives you a sense of when the proposal is fully realized, what that would be.
Thank you, Mr. Williams. Members, any questions? Senator Dietzick? Okay. Senator Rust, did you have any more comments regarding this?
No, Mr. Chairman. I be happy to have discussion and questions, and then I think we could listen to the testifiers.
Okay. Why don't we take the testifiers' first question in there? I'll keep Senator Dietzick and Senator Bach on the list. And if we'll bring up the first two testifiers, Mary Jo, George, and Tom.
And Mr. Chairman, since they're testifying, I'm assuming about all these bills, I think
yes.
I'll return to my chair.
Yep. Bach. Who? Senjum too.
Mr. Chairman, members of the committee, my name is Mary Jo George.
with AARP Minnesota, and I'm the Associate State Director of Advocacy for our organization. With more than 660,000 Minnesota members, AARP is a nonprofit, nonpartisan organization that works in Minnesota to advocate on issues that matter most to families, such as health care, retirement, security, affordable utilities, and protection from financial abuse. Today, we would like to thank Senators Limmer, Senator Senjum, Housley, and Rest for bringing these bills forward today. AARP does support efforts to reduce the tax burden on Social Security benefits. When you are retired, it is tough to increase your income, and cost of living adjustments, when they happen at all, are small and don't keep up with increases in health care and other necessary consumer goods and services. As you may know, and as you heard today, the Social Security exemption levels have not been adjusted for more than 30 years, meaning that each year more and more lower and middle income Minnesotans are paying taxes on their benefits. In fact, our data shows that the number of Minnesotans who are paying taxes on their Social Security benefits has more than doubled over the years, from about 160,000 in 1998 to more than 354,000 in 2013. As a result, the amount of Social Security benefits included as taxable income has quadrupled. At the same time, we know that other cost burdens have gone up, such as health care and utility. So how should we address the problem? I think there's been a number of approaches, and we appreciate them. I have to admit, Senator Rest, I may need a remedial on your approach, but absolutely, we think that in general, AARP would urge lawmakers to use a more targeted approach that reduces Social Security taxes on Minnesota's lower and middle income retirees. And the way that we have suggested is that we should look at adjusting those exemption levels to reflect today's dollars. And so our understanding is, for example, if you took that $25,000 exemption level where nobody pays taxes below that, if you took that $25,000 exemption level for single filers, that would raise to over about $55,000 today. And for couples, it would be about $70,000. And that is reflecting today's dollars. And we think this is important because when Social Security was first taxable in 1984, is the number I had, the median income was about $24,000. So it's a figure that was less than the exemption threshold that they put in place of $25,000. So today's median income, for example, for a Minnesota taxpayer is about $67,000, more than 2.5 times the exemption level. But again, we think this approach is consistent with our tax policy, that it should be equitable, and we should consider people's abilities to pay. Lastly, we know we need a balanced approach. We want to provide relief, but we are here also asking we need to produce revenue to sustain many of the programs that we are here advocating for as well. Lastly, I just want to speak to the fact that many, there are retirees that aren't eligible for Social Security. I think the number that are eligible for Social Security is 94% or more. But for those retirees who are not eligible for Social Security, we'd be interested in also looking at how we might adjust for inflation the exemption levels we have for other retirement income as well, so that we would include all retirees. So we're just very thankful for everyone's support and would really like to encourage a bipartisan product on Social Security tax reduction. So with that, I want to hand it over to Tom Connors, who's come here all the way from La Crescent.
Good morning. I'm going to switch with you here. Good morning. Welcome. Good morning. Welcome to the committee. Please state your name for the record, sir. Once you get those chairs all. Suppose that chair
near the microphone.
Yeah, okay. That microphone over there works too, I believe, right?
I think it works.
Okay.
Anyway, good morning, Senator Chamberlain and members of the committee, and I should have a special one, I guess, for Senator Miller, since I am one of his constituents. My name is Tom Counters, and my wife Susan and I reside in La Crescent, Minnesota. I'm pleased to be here today to talk on this important subject of taxation of Social Security. I want you to know I do appreciate the Senate's efforts looking at the multiple bills, trying to find a way to reduce this, and want to reinforce that reduction in taxation on Social Security benefits will be a benefit to a majority of Minnesota retirees. I had the honor of talking to this committee 2 years ago on the same topic. Then you were looking at a phase out of Social Security taxes across several years. At that time, I was a recent refugee from that very, very scary area to the south of us known as Iowa. In my first year of filing taxes in Minnesota, I therefore had to file a combined tax return involving 7 months in Iowa and 5 months in Minnesota. Now, you imagine my surprise when I found out that my tax obligation for Iowa for those 7 months was zero, while my tax obligation for my 5 months in Minnesota approached $2,000. So I'm here today to kind of give you an update on our situation, as well as to reinforce your efforts to reduce taxes on Minnesota's middle-income retirees. Now, so there are some things that we need to look at first, and they involve numbers. And when I heard a number of different numbers today, and I have to assure you that my numbers come from my reading as I see on the Social Security website and in the Kiplinger report and the Pew Research Institute in terms of these issues. So, looking at 2 years ago, at that time, the data that I have shows that Minnesota was one of 7 states to use the federal tax formula to determine state income tax. This year, they're one of 3 states. I heard somebody say one of 4, and so whatever, 3 is the number I have, and whatever it is, they're still in the ballpark. As Mary Jo pointed out, there has been no adjustment in this formula for over 30 years, and no adjustment to take in inflation. So any improvement in that would be beneficial. The data I have also says that Minnesota is now one of only 10 states to still tax Social Security benefits at all in any way. You add to this the dubious distinction that Minnesota has, as the Kiplinger report points out, of being one of the 10 least friendly states to retirees when it comes to taxation. So therefore, Minnesota retirees, and I'm speaking as a middle-income Minnesota retiree, are thankful for any efforts that are made to reduce taxation on our retirement benefits, especially when it comes to Social Security. I think that these are things that we need to look at very carefully, and again, I want to support your efforts. 2 years ago, I gave you the picture of what our taxation situation was. This year, we paid over $2,200 in taxes on our Social Security benefits, which by the formula meant that we paid taxes on 82% of our benefits. Now, if adjustments were made to this formula, such as in the position that AARP Minnesota supports, it doesn't mean we would not pay any taxes. And it doesn't mean that all of the Minnesota residents that would fall into the middle income bracket as defined by the Pew Institute would pay no taxes. But for them, for us, it would be a significant reduction. Does this mean you're going to see an increase in purchase of luxury cars and boats? Probably not. But what it will do is allow middle-income Minnesotans, and that's a group I'm speaking for, to improve their living standards, and just as importantly, it will infuse more money into the Minnesota economy. Now, I think most legislators would agree that both of those ends are positive. So in conclusion, I want to thank you again for being able to come here once more and share my thoughts on this subject. And I sincerely hope that you will look at these positions and come up with a plan to benefit Minnesota retirees. Thank you.
Thank you, sir. Members, why don't we, if there are any questions for these 2 testifiers? Okay, thank you very much. So next up we have Nan Madden, Brian Rice, and Jeff Van Wyken. Wyken. I will fault Brian Steinhoff for that pronouncement. Welcome to committee.
Good morning, Mr. Chair. Is it okay with the committee if I go first?
Welcome to committee. Please state your name for the record, and you may go first. Thank you.
Thank you, Mr. Chair. I do have a handout here I'd like to have passed to the committee. And for the record, Mr. Chair, my name is Jeff Van Wyken. I'm Fiscal Policy Fellow with the North Star Policy Institute. The handout being distributed summarizes Revenue Department information regarding the impact of fully exempting Social Security benefits from the state income tax. Based on 2012 data, the average tax relief per Social Security recipient will be about $314 per capita in Greater Minnesota and $411 in the 7-county metro. However, this tax relief will be concentrated within a fairly small slice of recipients. About 60% of Social Security recipients statewide, a little more than 60% in Greater Minnesota, a little less than 60% in the metro area, will receive no benefit from the full exemption of Social Security. That's because, as staff already explained, the calculation of how we do provisional income. Most Social Security recipients are paying no tax on their Social Security benefits. Because of these provisions, a taxpayer that is entirely dependent on Social Security income would have to receive benefits in excess of $64,000 per year before he pays a penny of income tax, and it's quite possible that there's no one in the state that falls into that boat. The final chart on the handout shows the reduction in taxable income due to the full exemption of Social Security benefits by income group based on data from the most recent tax incident study. The 40% of Minnesota households with incomes under $33,000 will receive no benefit from the full exemption of Social Security because they're paying no tax on their Social Security now. The next 30% with incomes from $33,000 to $73,500 will receive about 26.5% of the total reduction in taxable income. The remainder of the reduction, 73.5%, will go to the 30% of households with the highest income. Furthermore, this analysis is based on taxable income. The distribution of final tax relief will be even more skewed to high-income households because of the higher marginal tax rate among these households. In conclusion, Mr. Chair, this is a regressive tax policy. It is inefficient in targeting tax relief to middle-income households and does nothing for low-income households. Thank you very much for your time, Mr. Chair.
Thank you, sir. Next, please welcome. State your name for the record.
Thank you, Mr. Chair, members of the committee. My name is Nan Madden. I'm director of the Minnesota Budget Project. I appreciate the opportunity to share some concerns with you this morning about the bills that would fully exempt Social Security income. I appreciate the comments from AARP about the challenges that some Minnesota seniors are facing and that it's been a long time since we've made changes to this area of tax policy. But I don't think those concerns point to the need for full exemption across all income levels. My first concern about the bills to fully exempt Social Security is the cost. Exempting all Social Security costs more than $1 billion per biennium, and we believe that that puts services that seniors count on at risk. And the cost of the tax cuts will grow over time, even without a phase-in, because seniors will become a larger share of our population. So that approach would reduce the resources available at the same time that the number of seniors needing services grows, and whether those services be community-based services that help seniors stay in their homes, transit, or high-quality nursing home care. The most struggling seniors would see little to no benefit from the tax reductions, but would probably be hardest hit from a cutback in services. Another concern that we have is the use of phase-ins. While that has sometimes been described as lowering the cost of the bill, it only lowers the near-term cost. We still get to that eventual $1 billion biennium roughly eventually, and it puts off some of the discussion about how we will pay for those pay for a tax cut of that size. Will that be through cuts in services or higher taxes on others? I also think there's two sources of risk that could make us regret pretty soon making large and growing tax cuts, whether fully implemented now or through a phase-in. The first is for economic reason. The bills with a phase-in commit us to making tax cuts each and every year, under some bills for up to 10 years, regardless of what the situation is for the state's economy and the budget. If past history is any guide, there's a really good chance we'll hit a recession sometime in the next 10 years, and we would be committing to cutting taxes even in a recession where we're likely to be facing a deficit. And that will make it harder for us to respond to the needs of Minnesota citizens in tough times. Another area of risk is the great deal of uncertainty about federal funding for states and federal funding for safety net programs, including those that seniors rely on. So not knowing what our federal funding is going to look like in areas like Medicaid, I would be very cautious about committing to large tax cuts now, given the likelihood of large-scale changes at the federal level that will affect seniors in the state and the state budget. I do appreciate, as I said, the conversation that has happened about the challenges that our seniors face, about rising costs and fixed incomes. I think that really does point to a more targeted approach to looking at the needs of Minnesota seniors, and that looks at both the taxes and services side of the budget. Thank you.
Thank you, Ms. Madden. Mr. Rice, welcome to the committee. Please state your name for the record.
Thank you, Mr. Chairman. My name is Brian Rice. I'm an attorney in Minneapolis. I'm appearing today on behalf of AFSCME Council 5, which is a union of over 43,000 state and local government workers who we've been following and participating in your tax committee to give a perspective for those members. AFSCME is concerned about tax fairness and prosperity for all. So I would just say that AFSCME, with respect to the Limmer bill, the complete repeal would echo the comments that Mr. Van Wycom and Nan have made in that regard. Just a quick perspective. However, it's happened, but these Social Security recipients right now pay about 2% of all of our tax revenue. It's approaching $1 billion per biennium. And when you look at the income tax, which is now over half of the tax revenue the state collects, it's about 4% of that. So it's not an insignificant area through which this committee, which ultimately pays the bills for the whole operation of the state, collects. And it's a growing number as people get older. Senator Rest talked about 4 members of the legislature receiving Social Security. I turned 60 a month from today. I'm not quite there, but I'm getting close to possibly, very likely paying tax with respect to that. And obviously our demographic, it's a number that does grow. So we would urge the committee as they look at it to really take a more targeted approach to this matter if you determine that this is an area that you want to provide relief in. As I said, when you put it in context, this tax alone collects more money than how much the state spends on, is projected to spend next biennium on the transportation area, which is about $240 million, environment spending, which is $400 million, job spending, which is about $400 million, and even you take all the rest of state government and Veterans Affairs, that's a little over $1 billion. So we think a complete repeal would be a very significant decision that the state would make in that regard. And as Ms. George and her testifier pointed out, and I think as Mr. Van Wycom's charge showed, if the committee is going to decide to do something in this area, we would think a more targeted approach would be wiser, both for the long term, but also to really broaden the cut and distribute it more fairly throughout the state and maybe have the effect of helping other people's lives, and it's a more stimulative effect on the economy. With that, I'd be happy to answer any questions, Mr. Chair.
Thank you, Mr. Rice. I certainly appreciate all your comments, but it's sometimes it assumes a zero-sum game, and it also secondly assumes that those of us up at this desk, I know we have a difference of opinion, are best suited to distribute that income how we see fit. I know we differ a little bit on that, but I certainly appreciate the perspectives that you bring. And Ms. Madden, your voice is almost as calming as Mr. Cummings, so we appreciate it. With that, members, you had some questions. I have Senator Dietzick, Bach, and Senjum, and Senator Rest for either Senator Rest or the testifier. So Senator Dietzick.
Mr. Chairman, I just want to, if you don't mind, just wanted to correct one impression that Ms. George gave, and that was that somehow other pension beneficiaries get some sort of break from their pension income, and we do not have a pension exclusion, and they do not. The only beneficiaries of pension income that do get a break now, even if it's insufficient in the minds of some, are Social Security beneficiaries. Police and fire do not get that kind of break, and just want to make sure that we understand that for the record.
Thank you, Senator Rest. Okay, Senator Dziedzic.
Thank you, Mr. Chair. Senator Rest, that is what I was going to talk about. You mentioned that in 1987 we eliminated the state pension exclusion, and there are certain pension recipients. They're mostly police and fire. There are some teacher, and there are some other pension recipients who have a basic pension plan that is not compatible with Social Security, so they basically don't qualify for Social Security as part of their pension. So people who work for a corporation, they might get a pension and they get Social Security benefits. These people have a pension plan that is not coordinated with Social Security, so they do not get Social Security. So you have some teachers, firefighters, policemen, and other employees, usually public employees, who might have been working as a teacher for 30 years, and in that 30-year time frame, they don't get Social Security. They just get a pension benefit that is taxable right now. They might then, if you were a teacher from, 25 to 55 and then retired and went and worked someplace else, you might get, 5 to 10 years of some Social Security, but their largest pension and retirement benefit is taxed. Senator Miller and I have bills, I think Representative Davids has them over in that other body, that will make it comparable and bring back some of this state pension exclusion, and then even the phase out on that tax if we go this route just for parity. And that also, I think that it also looks it's just a fairness issue. If we're giving certain people an additional break, should we be giving that to all? Thank you.
Thank you, Senator Dziedzic. Senator Bach.
Well, Mr. Chairman, I guess Mr. Van Wyken answered my question in that, tax policy that helps the largest group of taxpayers, I think, is what we should try and pursue. And this is a lot of money to spend where 60% of the people will get nothing. I think that's just what we have to deal with, and I wish Senator Gazelka was here because it's a lot of general fund money, and we've got to figure out how we do something with our transportation infrastructure, and it's going to take a lot of money. And I'm a little reluctant to support a proposal like this that spends so much money to benefit so few, when that amount of money per year spent on our transportation infrastructure could make a big difference in our state, not only to the people that use it, but to the movement of commerce around the state. So, other people will argue for the best use of that amount of money like that might be on K-12 or on to buy down tuition. I had college students from my district here yesterday, but I just kind of feel it reminds me a little bit when under Governor Ventura we cut license tabs, and we spent, I think, about $177 million to do that. 40% of the cars on the road got nothing. And it was very popular with the people that got a benefit. We even put on the notice that you received when you went to renew your tabs that the legislature reduced the cost of your license tabs at the governor's request. But just, Mr. Chairman, what I would like you to think about as we get a target for the committee, we try to enact some tax policy that benefits the largest group of taxpayers.
Thank you, Senator Bach. And Senator Senjum.
Thank you, Mr. Chair. And actually, I have a question for Senator Rest.
She will take your question, Senator Senjum.
Senator Rest, intriguing bill. I'm just wondering here, if we would assume that going forward we have more inflation than deflation, would this mathematically lead then at some point in time in the future to, Senator Rest, if, looking at your bill, and it presumes some inflation and so on and so forth, mathematically, would your bill eventually phase out the Social Security tax on most recipients, given just rising levels of inflation through maybe 30, 40, 50 years?
Mr. Chairman, Senator Senjum, I would defer to Mr. Willems' calculations here, but it would be adjusted by inflation. In those years in which there's no inflation, there would be no adjustment, is what I would, and in years in which there is a negative inflation, the number would not change. Right. Yeah. It would never go below the current year's number in terms of this additional subtraction from Minnesota taxable income. Would it ever get to the point where it equaled the 85%? I doubt that it would ever get that high, except, 200 years from now or something, which we should not be concerned about.
Thank you, Senator Rest. A lot of good math.
Well, Senator Rest, I have hope for 200 years, but,
Senator Senjum, you have any follow-up? Does that help? Is that okay?
It helps, but could you just,
Mr. Chair and Senator Senjum, as the proposal is designed, it's basically to not allow inflation to eat away at the benefit of subtraction, but as Social Security benefits also rise, it will never phase them out, that inflation amount.
Okay. Thank you, Mr. Williams. Any further comments or questions regarding, for the testifiers or for Senator Rest on 1175? We have, nothing is as simple as it appears, obviously. Never is. And we've got much to consider with these various policies and these various proposals, all very interesting. There is one that was not included here, but was mentioned, I believe, by Ms. George, about the exemption levels. What we don't have is a proposal here that maybe would just raise the exemption levels for Social Security taxability as well. So a lot to consider before we get to the end of it. But certainly competitiveness, I know that there's a skew to this, to how this would work, but competitiveness in the state, keeping people in the state, certainly is something to consider as well. Senator Dietzick, you have a comment, question?
Thank you. You jogged my memory, Mr. Chair. Does Senator Rest, does your proposal in a way kind of raise those, does your proposal in a way raise those numbers that haven't been changed for 20, 30 years by adding that subtraction? Does that in effect raise those numbers and then keep that number raised by the inflation number, the brackets?
Yes. I mean, Mr. Chairman and Senator Dietzick, again, I think of it as bracket creep that we don't allow in the income tax system itself. It would also be applied here.
Okay, so it's Senator Dietzick. So in a way, we're talking about it would hit the exemption piece. All right. So with that, any other comments on Senate File 1175? If not, Senate File 1175 as amended will be laid over for possible inclusion. Thank you very much, testifiers and Senator Rest, and those who presented bills. With that, we don't have any other business. Of course, we do have more business tomorrow, a variety of different bills on the agenda. Hope to see you then. With that, we are adjourned. Thank you.